It is a joy to be with you, and I appreciate the opportunity to share. I need to give a couple of disclaimers right up front. One is I am not a CPA, I am not an accountant, I am not an attorney. So anything I give you is not legal advice, nor am I giving you financial advice. But it has been my responsibility here at the South Carolina Baptist Convention for the last several years to try and stay up on what's going with tax matters related to church and ministers' taxes. And so I've done that. I've done my own taxes personally for probably the last 30 years. So what I'm sharing with you are the things that I've learned, and hopefully they'll be of some help to you. And we're going to dive right in. We're going to try and share the screen so you can kind of keep up with us that way. I think most of you would have gotten a handout that was emailed with the link, so you can kind of see where we're headed when we're doing that too. We're going to move our way through what are the biggest mistakes. You would have gotten two lists, the 10 biggest mistakes, the 10 biggest questions. And when you think about both of those, they kind of overlap. Now, if you have some questions, we've only got a little over an hour. So if you would just type those in, and if they get those to me before we get off, I'll try and deal with them. If for some reason we do not get to your questions and I need to respond to you by email or by call, you'll find up on the share screen the opportunity to have my phone number and my email address. Don't hesitate to give me a call, and I'll gladly respond as quickly as I can. I want to share first by talking about the resources that I use. One of the resources that I use is, this is probably the most complete resource that I'm aware of, and that is the Church and Clergy Tax Guide. It's a big, thick book, and it needs to be. If any of you have any interest in keeping up with reading tax law and tax matters, the federal government has, I think, about 85,000 pages in the current tax manual law responsibilities that are there. Richard Hammer, who is with Church Law and Tax, is probably the most knowledgeable guy I know in this particular area. And he does, it's 600 pages or so every year, a tax guide for churches and clergy. You can purchase that at Church Law and Tax. Anybody's able to get a copy of that. But I would recommend that as probably the most complete resource I know of. And then as you move beyond that, the next tax resource is one that is produced by the Evangelical Council of Financial Accountability. Michael Martin is with that organization, and they do an excellent tax guide for church and nonprofits. They also do one for clergy. It is a good resource. It is not as detailed as the other, but it is also very understandable, and I think you'll find it to be a great resource. And then the one that a lot of Baptist churches are familiar with is every year Guidestone prepares for us a tax return preparation guide, and I would certainly recommend it. It's a good resource. That resource is actually coming from the Church and Clergy Tax Guide that's put out by Church Law and Tax and Richard Hammer. So those are the main resources from which I get most of my information. And if you need any information from the government itself, they have a website that is pretty extensive. It's irs.gov, and you can get all the forms and instructions for the forms and almost anything you need from that website. And everything on that website is free. So we're going to dive right in and start talking about the biggest tax mistakes that are made by churches, and they're related to ministers' taxes in many ways too. The first one is not setting up and adequately monitoring an accountable expense reimbursement plan for employees. An accountable plan is a reimbursement or expense allowance arrangement that's established by the church that requires three things. First of all, it requires a business purpose for the expenses. Secondly, it provides a substantiation of the expenses to the employer. And third, it requires that if any excess amount has been given for expenses, that excess amount be returned. Now, substantiation, and the reason this is so important is when the standard deduction went up as high as it did, you used to could get business expenses off on Schedule A. That's no longer on Schedule A. So the only way a minister is now able to deduct business expenses is it's not really a deduction. It has to be done through an accountable reimbursement plan. And there are some guidelines that I'm going to go through because this is new for some churches. It's new for some ministers. We get in a habit, us old guys get in a habit of liking to do things the way we've always done them. And that won't work these days. Now, you have to have some substantiation for any expenses that you want reimbursement for. And substantiation can be handled, or it must be handled within a reasonable time. And excess has to be returned within a reasonable time. Now, there are two methods that meet the reasonable time definition. The first one's the fixed date method, where if an advance is given, say a minister is going on a trip or he needs to purchase something and it would be a business expense, the advance should be given no more than 30 days before the expense is paid or incurred. And then once that expense is substantiated to the church, once the expense has been made, the substantiation has to happen within 60 days after the expense is paid or incurred. And any excess amount has to be returned to the church within 120 days. That's a fixed date method. Then there's the periodic statement method, which is a statement that is provided at least quarterly, and substantiation or return of excess has to again happen within 60 days. Now, substantiated business expenses that are reimbursed are never included on the W-2. Business expenses that are reimbursed but not substantiated will always be included in box 1 on the W-2. Here's something that's different for some of you. When a minister provides a listing of business expenses to reflect business to the church, that's only a report. IRS says that's not documentation. Documentary evidence is more than a report. It involves detailed support of what's known as the 5 W's. The first detailed support is why, the business purpose. On substantiation, you have to state, here's the business purpose. The second is what, the description, including the itemized accounting of the cost. And then the when, the date that it happened, the where, the place, the location, and then who, names for whom the expense incurred. Now, that is a substantiation that is required for an accountable reimbursement plan. It is left up to you, but usually no receipt is required for expenses other than lodging if they come to less than $75. But if a minister is wanting to be reimbursed for lodging, a receipt is always required. By the way, a credit card statement does not automatically provide substantiation. Now, one of the reasons this is so important is if ministers want any kind of deduction as it relates to business expenses, you can't get that now. The only way to not have to pay income tax on business expenses is you have to use the accountable reimbursement plan. There are a couple of things that are related to that that I would speak to briefly. The first one is mileage. Typically in the old days, ministers would say, okay, I'll turn in mileage once a month and you reimburse me for that mileage. If that's being done, one of the things that I would share with you is that's no longer adequate. If that's the only thing that's being done, any money being received by the minister by simply doing that is to be, according to IRS, included in box 1 on the W-2. He has to give the 5 W's even when he's turning in mileage. Now, the mileage rate for 2021 is 56 cents a mile. It was 57.5 cents a mile for 2020. So here's another thing that you have to pay attention to when it's looking to mileage, and that's usually the biggest thing that comes to ministers when they're trying to use an accountable reimbursement plan, is you have to look at commuting versus business miles. And I included this little chart. I know depending on the size of your screen, it may be somewhat difficult for you to read. I think I included that in your handouts. If not, I can make sure you get one. Just send me an email. But I need to say a couple of things about this that you need to understand. Business miles do not start at the minister's home. The miles that he is driving from his home to the church are not considered by IRS a business expense. Any miles he drives after he gets to his place of work is then considered a business expense, but it has to be logged, it has to be documented, it has to give those pieces of information that I mentioned earlier. Now, business miles do not start at home. If you have a personal computer at home and you or others use it for your own personal use, you can't say you have a home office. You can't say, according to the federal government, your home office is in your bedroom, your living room, or any other room where the space is shared for both church work and family living. You cannot say you're working from a home office so you can count mileage if the church has an adequate office and you do most of your work at the church office, but you work from home every now and then. You cannot say you're using your office in your home if the church expects you to use the church office, but you prefer to work from home. All that is requirements that have been given to us by the federal government as it relates to a home office. Now, to withstand an IRS audit, there has to be a log. When I say that, I'm saying this to ministers kind of specifically. If you are turning in a log to your ministry assistant and it records the information that I expressed earlier, you're going to be good. You're going to be taken care of in that particular regard. That log is there. That will be sufficient for IRS. But if you are ever audited, IRS is going to expect to see a log. If they don't see a log, then all that money you receive for mileage becomes taxable income. So there we are as it relates to that. And then the second thing we're going to deal with is dealing with another issue that has gotten sticky for us over the last few years, and that's failure to comply with the Fair Labor Standards Act for churches and other nonprofits. Now, the Fair Labor Standards Act, or FLSA, provides protection for employees concerning minimum wages, equal pay, overtime pay, record keeping, and child labor. Where that is going to be interesting, especially for us right now, is the current Fair Labor Standards Act minimum wage is $7.25 an hour. It would change dramatically if the minimum wage goes up beyond that. Now, the reason that's important is ministers would be under an exempt pattern. And so that means you're just receiving a salary. You don't necessarily get paid overtime. But for other employees at church, you have to pay attention to how you're paying them, and overtime pay is required whether the employees are hourly or they're there on a salary basis. To be exempt from the overtime and minimum wage requirement, the rates have gone up dramatically. To be exempt, you have to meet the requirement that says you're making $684 a week or $35,568 a year. And just because you meet those requirements, exempt employees must meet duties tests that are divided into three categories: executive, administrative, or professional. So where that really gets interesting for us in church life is, I know years ago, what used to be done is we used to say, we're going to pay someone to clean the church for $150 a week, and they just receive a salary. And it doesn't matter to us how long it takes you to do that. We're just going to pay you X amount of dollars in order for you to do a particular job. Many secretaries are paid that way. You're paid a certain amount that week as a ministry assistant to do your job. The Fair Labor Standards Act is really cracking down and saying for people who are working over 40 hours, you have to pay them overtime. Now, one of the ways that we have kind of handled that in the past is if ministry assistants or other employees, daycare workers for churches that have daycare, if they happen to work more than 40 hours a week, then they were given time off in lieu of paying them overtime. Under the Fair Labor Standards Act, providing compensatory time is not necessarily an option. Payment for overtime has to happen. The other thing that's related to that is interesting is the Affordable Care Act, which was enacted a few years ago, requires that at least 95% of your employees who work 30 hours a week or more have to be insured. And the federal government says overtime pay is 1.5 times the regular pay. Now, that is a big change for us as churches. There's a lot of discussion about, are churches included? Are they not included? As I said, if you're a minister, this doesn't really apply to you. But for other employees of a church who are not ministers, many times overtime and minimum wage rules that are included in the Fair Labor Standards Act are sometimes overlooked and abused by churches and other charities. That's what the Fair Labor Standards Act is intended to do. It's intended to correct that. And the Department of Labor has a very generous interpretation of interstate commerce. In other words, that's involved in how it's determined if you are an employee who's involved in interstate commerce. Interstate commerce, according to the Department of Labor, could just be a few emails that are sent across the state line. And that would then qualify a Fair Labor Standards Act coverage to be enacted even if the ministry is not covered. And try and stay away from giving people time as well in church life. I say this, we are good many times at trying to find loopholes when it gets around to financial requirements, tax law. I will make you aware of this. What I've seen over the years is if people find a loophole and enough people start using that loophole, the federal government tax code will correct it. And whenever they correct that, they're usually going to take away more than what is just required for the correction. And that's certainly understandable. So I think the best thing to do is, to the best of our knowledge, abide by the law and not spend all of our time looking for loopholes. Here's the third area I want to deal with, and that is not reporting taxable fringe benefits and Social Security reimbursements as an additional compensation to employees. Now, anytime you provide a fringe benefit, that fringe benefit is going to be taxable and has to be included in the recipient's pay, except for those things that the law specifically excludes. One of the things that I included for you, I think, was a sheet that may be helpful when it comes to reporting compensation fringe benefits and reimbursements for tax purposes. There are certain things that the federal government allows. There are certain things that will never be allowed. If any employee receives a bonus or a gift from the church, it's going to be taxable income. It is to be included in box 1 on W-2. For years, we've always done things to show appreciation for ministers or church employees by giving them a bonus, and we thought we were staying away from any tax liability by calling it a love gift. We can call it anything we want to. IRS says it's income and it is to be reported. Again, business and professional expenses that are reimbursed with an adequate accountable reimbursement plan are tax-free, but you have to adhere to all the requirements to make it an accountable reimbursement plan. Here's some other things that people get confused about a little bit. One is cell phones. If the church is providing you, your minister, other employees cell phones, and that cell phone is strictly for church use, then it is tax-free. However, if you use it for any personal use at all, you have to figure the de minimis fringe benefit, which means that a certain part of that that you use for personal use is then taxable. Not too many churches these days are providing employer provided vehicles, but again, if that employer provided vehicle or any other thing that's provided for you to use is strictly for your ministry use, it's tax-free. But if you're using it for any personal uses, then that also has to be included in that certain amount being used, and you have to claim tax on it. That goes for computers. The other big thing that is interesting for us over the last few years has been medical insurance. Medical insurance, if it's proper medical insurance coverage according to IRS, may be tax-free. In many cases, though, if people opted for a cheaper tax under the Affordable Care Act, that would be taxable income if you're getting your insurance through the Affordable Care Act. One of the things that has become more and more popular the last couple of years has been medical sharing programs. What that means is several people belong to organizations where the recipients pool their money together, and if anybody that's a part of that group has any medical expense, the whole group is kind of pooling those resources together to cover those. People who are part of a medical sharing kind of program find that the premiums to be a part of that are a good bit cheaper in many cases than other insurance plans. But here's the problem. As of this particular time, any participation in a medical sharing program right now, IRS considers that taxable income. So other things that are fringe benefits are going to have taxable liability are things like Social Security reimbursements. Most of you know that ministers have to pay all 15.3% of our Social Security liability. That's known as SECA. Ministers never pay FICA tax, F-I-C-A. We always pay SECA tax, S-E-C-A. That stands for Self-Employment Contributions Act. And as a minister, the minister is liable for the whole 15.3%. If the church decides they want to help offset that, because many of them realize that the minister is paying the whole 15.3%, and they offset that with a Social Security offset allowance, I applaud you for your generosity. I think that's wonderful that you do that. But understand, any Social Security offset allowance is taxable income, and it has to be included in box 1. Another area that has gotten some changes is in moving expenses. A couple of years ago, it changed, and it used to be that if a church helped their minister move, none of those moving expenses were taxable income for the minister. It was just a benefit that was provided by the church to help their minister relocate. Now, if a move takes place and the church helps with that move, providing the resources, the income to take care of that move, all of those moving expenses are considered taxable income. And that is a change, and we have to be aware of that and pay a little bit of attention to that when it comes to those kinds of things. Again, I showed you a copy in the slides of what a W-2 looks like. That is a W-2 that I downloaded straight off of the IRS.gov site. Again, you can download those. There's no fee. You will need to download or make copies of more than one, because a copy of the W-2 is going to be needed for your federal return. It's going to be needed for the state return. And you're going to need to keep a copy in the church office, as well as provide a copy for the individual who's receiving the W-2. Just a quick word about determining ministerial status. And I included a sheet on that. Wanted to say just a word about that and try not to belabor that too much. If you see there, a worker is duly ordained, licensed, or commissioned by a church or denomination, then you can move to step 2. Does the worker perform some of the following ministerial duties? And then that goes to step 3, which means that the worker generally qualifies for ministerial tax status. You see how if the answer is no to either one of those, then they don't qualify for ministerial tax status. And there's some benefits or some reasons that having ministerial tax status is of some benefit. And those benefits I can share with you in a form if you're interested in knowing what those are. I can get those to you by emailing. I don't have time to go into that today, but I will say this. There are 3 ways we can pay our taxes. And the 3 ways ministers can pay their taxes, and you as ministry assistants are sometimes involved in this. The first way is through estimated taxes. As a minister, we pay federal income tax and SECA directly to IRS in quarterly payments. There is a 1040 ES form that is filed by us as a minister on April 15th, June 15th, September 15th, and January the 15th of the next year. So your first quarterly payment for 21 will be April 15th. The last quarterly payment will be actually in January of 22. It is the minister's responsibility to file those quarterly payments if he's paying estimated taxes. The tax liability is on us as ministers. It's not on the church. The second way taxes can be paid is through voluntary withholding, where the church withholds federal income tax and then pays quarterly to IRS on behalf of the minister, and additional federal income tax may be withheld to cover the minister's Social Security tax liability. Now, all of that's kind of taxable income, but a minister can do voluntary withholding. And then the third is to do payroll withholding from the minister's pay, where the church doesn't necessarily remit the amounts withheld to IRS, but the amounts are held by the church and then given to the minister so he can make those payments on April 15th, June 15th, September 15th, and January 15th of the next year. Those are the three ways ministers can pay taxes. You can see that if he's using the estimated tax method, then what's happening is he's usually taking care of all of that. You as a ministry assistant usually aren't involved in that at all. But if the minister is using voluntary withholding and you agree to that voluntary withholding, or if he uses payroll withholding, then you as a ministry assistant are certainly going to be involved. And so now we're going to move on to the next area that I want to address quickly. And here's a mistake that is made, and that's failing to file Form 1099 NEC for independent contractors. Now, the NEC form is a new form for this year. It's actually an old form that they brought back, but it is a form that is used for independent contractors. Now, an independent contractor is someone who is not an employee, and you pay them for services in the course of the organization's trade or business. And it's also made, you use a 1099 NEC if you're making payments to an individual, partnership, estate, or corporation. And anyone who receives $600 in the course of a year has to receive a 1099. In the course of a year, not just one payment. If he gets $150 4 times, he's met the $600 requirement. And so it is your responsibility as a church to provide that individual with a 1099. Now, the recipient, in order to receive his money, has to provide a completed W-9 to you. Before you give anybody any money, you should get a completed W-9 from them. If some of them do not want to provide a W-9 for you, then you are required to withhold 24%. When folks understand that if they don't give you a W-9, you're going to withhold 24%, most of them are pretty willing to go ahead and fill out the W-9 and respond by giving that to you at that particular time. Now, do not use a 1099. When you are giving out 1099, do not use a 1099 for clergy compensation or for housing allowance. Always give ministers a W-2. Now, I know some churches have been giving their ministers 1099s for years. I am recommending that you get a W-2. There are several reasons you ought to be getting a W-2. I'm not going to belabor the point or the reasons why that should be the case now, but if you'll get in touch with me, I'll send you all the documentation that says this is why the individual should be getting a W-2 instead of a 1099. Now, what makes an individual an independent contractor? Normally, they set the order and the sequence of work. They set their hours of work. They work for others at the same time. They're paid by the job. They offer their services to the public. They have an opportunity for profit or loss, and they furnish their own tools. They may do the work on another's premises, and there's often a substantial investment by the worker. The reason I say that, bring that up, is I know in the past, I made the mistake when we would hire, say, custodial workers, and we would consider them independent contractors, but actually they were an employee of the church. We decided what their hours were. They only worked for us. They didn't work for other churches. And so we really should not have been considering them independent contractors. They work for us. And so don't try and get around some of the requirements that are necessary for your employees by just calling people independent contractors. The federal government is being much more conscientious about that, and we certainly need to adhere to the law and do what is right in that particular method. Let's go to number 6. Another mistake that we make as churches is we have weak controls over revenue. And that includes the failure to have offerings and other cash and checks controlled by 2 individuals until the funds are counted. Handling incoming funds is one of the most critical elements we have as a financial management process. So one of the things you're going to have to do is you're going to have to choose an accounting method. Now, the 3 most common accounting methods is the first, which is known as the cash method, where it records income as it actually comes in and it goes out. It makes it easy to understand if you're using a cash method because you've got a daily cash balance, and that's the simplest way of handling incoming funds. Most people, however, now these days are using one of the other 2, which is an accrual accounting method, which records income when it's earned and expenses when they're incurred. For example, an expense would be recorded when Sunday school material is received rather than when it's ordered and when the invoice is paid. What an accrual method does is allow you to recognize assets and liabilities, and it reflects a more long-term approach. And then some people are using a modified cash hybrid account where they consider a lot of things on a cash basis, which may include certain assets and liabilities that are included on a regular financial statement, on a balance sheet. And what that does is it helps understand the value of what the ministry owns as well as what it owes. Now, the reason I say that, and I'm not going to go too deeply into this because we'll deal with this more when we meet in May, but I will say this. These are interesting times because our meeting has been somewhat limited. A lot of churches have done well. I have been amazed at how well giving has held up in the midst of the COVID crisis we've gone through. A lot of churches have really maintained a strong sense of stability, even when we haven't been able to meet in person or we've had to meet with social distancing guidelines. And I applaud everyone who's continued to be faithful in their giving. But remember this, informed givers are happy givers. So when we're letting people know what's happening with their money, then we're always going to be better off, and their giving is going to be stronger there than at times when they may feel like they're not getting the information they need. That leads me to the next one, which is inadequate controls over disbursements. When you have inadequate controls over disbursements, you're leaving the ministry at risk for embezzlement. Now, you need to have some policies and some guidelines in place that will help you here. Some churches keep petty cash on hand. Most churches, if they keep petty cash on hand, it's only a small amount, but you should have a policy in place that says there's no cash disbursements made unless there's a written request. Even for petty cash, there should be a paper trail. That's always vital for adequate reviewing. And then checks. We're going more and more to being able to pay most of our bills digitally, but a good many of you are still using checks. Again, I recommend any disbursement by check should always require 2 signatures. Now, some churches are adjusting to that a little bit by doing that by amounts. In other words, they're saying any checks over a certain amount, any check over $250, $2,500 requires 2 signatures. And they'll actually have that stated on the check. So if it's larger than that amount, anyone receiving the check would know that it's going to require 2 signatures. It is a good idea to require 2 signatures. And then accountable reimbursement plans. I know I'm harping on accountable reimbursement plans, but that has become necessary. If business expenses are going to be treated as non-taxable income, and that means whether it's advanced ahead of time or it's reimbursed after it occurs. Again, it has to have a ministry connection. The employee's going to have to substantiate it, and any kinds of substantiation are going to have to include amount, date, place, purpose, those 5 W's that I mentioned early. All of those are going to be necessary if you are going to move to an accounts reimbursable plan. Now, policies. You need policies, written policies on all these matters that I'm going to mention. If you don't have them, get in touch with me. I won't write the policies for you, but I will give you some sample of some policies. And as we move forward, that financial openness that's going to be required for people to feel good about continuing to give, I think it's going to increase rather than decrease. Here are a few areas where I think you really, really need to pay attention to some policies. You need to have a policy on how you count and how you get money to the bank. By the way, I would say if you're counting your money on Sunday and there's any way you can deposit it on Sunday, you need to get it to the bank on Sunday. Also, you need to have a policy about how you're going to handle money that comes into the church other than on Sunday. I would have a written policy on how much cash, petty cash, you're going to keep at the church. And then you're going to need a policy on how to handle cash receipts. You need written down check writing policies and procedures. And then you need financial policies and procedures for building use. And you need policies and procedures for how people use church material. For example, if somebody's going to come borrow chairs for an event they're going to have at their house, you need a written policy about how you handle all of that. And it can go on to much more complicated matters. And then you also need policies and procedures for budget oversight. You need purchasing policies and procedures. And you need policies and procedures for designated monies. For example, how do you go about fundraisers if you have fundraisers? You need policies about how you keep up with contribution records, how you accept non-cash gifts, how you handle special offerings. All those kinds of things are policies that are necessary for you to do business and you to do business well and people to feel good about the money they're giving. By the way, one of the reasons I bring this up with you as ministry assistants and as financial secretaries is you're the people that people are looking at, and there may never be an issue. And I know most of you would never have an issue, but if there is an issue, you're probably the person they're going to be looking at first to try and explain it. Policies will help you have guidelines in place so that nothing could ever be done that would be seen as untoward, and there's always an openness. Let's go to number 8. And this is failure to issue a proper receipt. I'm also going to talk a little bit about including the fair market value of goods and services provided when a donor makes a payment of more than $75 and receives goods or services. If someone gives a gift to the church and it's more than $75, then they're going to need to receive a receipt, and that receipt needs to include the giver's name. If it's cash, it needs to include the amount that was contributed. And if it's property, then you're going to need to provide in the receipt a description of the property, but it is not the responsibility of the church to determine the value of the property. Now, a statement explaining whether the ministry provided any goods or services to the giver in exchange to the contribution is also required to be included on the receipt. You know this when you do quarterly statements. Here a few years ago, we started having to add that little line at the bottom of our financial giving statements that says no goods or services were received for these donations that were made. You also need to include on the receipt the date the donation was made. Now, if no goods or services were provided, I just said this, the acknowledgement must so state. And then you put the date that the acknowledgement was issued. All of that has to be included if it's going to be a proper way to handle and give receipts for people who are giving us gifts. Here's one of the things that we can't do anymore. And I remember we used to do that. When we used to do that, someone would come in and they would do some work for us. An electrician would come in and he would do some wiring at the church. And when he finished, he would say, oh, don't pay me, just give me a contribution credit of $200, $250 or whatever it would be. Now, when I say that, we really can't do that anymore. You cannot give people contribution credit for services. The only thing you can give them contribution credit for would be if he had to purchase any supplies and he paid for those supplies and he had a receipt for those supplies. If he gave you that receipt to you, then you could give him a contribution credit for the supplies or products he used to do the job. You can't give him contribution credit for his goods, for his services. For that to be legal now, what would have to happen would be you'd give him the check and then he could give it back to you as a contribution, and then you could give it, you could give him contribution credit, but you just can't give it to him without there being the passing of checks. That's going to next 9. I got ahead of myself just a little bit. If you're going to 9, receiving contributions designated for individuals without proper discretion and control exercised by the donor organization is never proper. And it is not the church's responsibility to place values on non-cash gifts. For example, if someone gives your ministry a car, it is not the responsibility of the church to determine the value of the car. for the individual. The individual has responsibility there. The same thing's true of property. All those kinds of things have to be taken into consideration. They have to be done above board to meet IRS guidelines to make sure that proper credit is given and received. And then let's go to 10, and that's accepting earmarked or designated gifts. That is always a little bit of an issue for us. Again, here's the best way to handle that. When we're receiving an earmarked gift with the ministry, exercising inadequate control when the gift is dispersed to another ministry or benevolent recipient, we're going to have a lot of kinds of difficulty there. I just saw this pop up. You're right. If you're giving somebody a gift of $75, that's fine. If you give them a receipt right there, the contribution statement is a higher number, and you were right in making notation of that. Again, when you are accepting earmarked gifts, giver restricted gifts, designated giving, whatever you want to call it, there should be a written policy. You ought to have a policy in place about how you establish a fund to which people can give. If someone comes up and says, I want to give some money to a particular fund, just because they give the money doesn't necessarily establish the fund so that it is a tax deductible contribution. You need to have a policy in place about how you're going to establish such funds. And that policy should state the purpose for the fund, how the fund is going to be governed, how it's going to be distributed, a procedure for disbursement, and all the members need to be made aware of that policy. Here's the biggie, and churches now are seeing where this has been an issue in the past that is now causing some churches some difficulty, and that is when people give money to a designated fund, keep a list of contributors. Keep a list of all the contributors. Here's why. If, for example, a church had a building fund to build a new family life center, and it stated explicitly in that designated fund that that designated fund was for the purpose of constructing a family life center. And then something happens at church, and a church of 500 is now 200, and those 200 people say, we don't need a family life center. We're never going to need a family life center. We want to use that money that was given for the family life center for other purposes. Can't do it. It was designated money. It was giver restricted money. And it is a very, very laborious process to try and repurpose designated money. The only way you've really got a shot at doing that is you've got a list of all the contributors. And then you're going to have to get in touch with all the contributors and ask them, would it be okay if you repurpose the money? And then that's the first step in moving towards doing that. So any written policy about establishing a designated fund, a giver restricted fund, needs to have a policy written down about who can establish that policy and how you're going to disperse the money. For example, if someone gives you the money for a particular project and then they maintain control of how that money is dispersed, that is not a tax deductible gift. They didn't make a charitable contribution. You just became their banker. What they are doing is they're letting you handle money and distribute it only as they determine. That's not a tax deductible contribution. You have to receive the gift. That means you're in charge of the gift. That's why those policies are so important. So here are a couple of the most common gifts. Not gifts, designated funds, earmarked giver restricted funds. Many churches will have a benevolence fund. They will have a building and grounds. They will have a properties fund. They'll have a missions fund, a ministry fund. Some churches will have a love offering fund. They'll have a memorial fund. Those are the basic funds, and you really ought not have a whole lot more funds than that. I dealt with a church a couple of years ago that had 43 designated funds. That was a nightmare for the ministry assistant to try and keep all that straight. I'm sure some of you who have to deal with designated funds know just how much of a headache that can be. So anyway, that is my shot at those 10, running through those very quickly. Let me make you aware of a couple of things, and then I'm going to try and get to chat. That's the 3 ways you pay taxes that I mentioned earlier. And then I included, go on to the next slide. That is a slide that says a W-2. Again, it shows you what a W-2 looks like. And there are a couple of things there which talks about what goes in box 1. And then the last sheet that I included, the last slide, is an IRS due date form. If you will see those dates, some of those can be helpful in trying to remind you what dates are coming up and when you have some responsibilities at certain places. Now, I know, again, there's a sheet that deals with the tax limits. You see there what the standard deduction is for this year, married, filing jointly. Anyway, it lists a lot of rates and data on those 2 sheets. Those are good things to keep handy. I'm pretty sure I included that in the handout. If for some reason you didn't get the handout, if you'll just email us, we'll make sure you get that handout. And then if Katrina or Janet could get me, you see there my number. That's my cell number. I've got my cell number with me all the time. Call me. And it doesn't have to be during hours. I get calls after hours all the time. I'll take the call. There is also my email address.